Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Friday. It is Friday, finally. The market sold off pretty hard today, and I do think that we may be at the beginning, unfortunately, of another leg down for the market. It just kind of what it's looking like to me, but, who can tell? I mean, we'll know. We'll know pretty quick what the situation is. But right now, pretty much everything was off today. There were some there were some bright spots, but primarily it was essentially a down day on the market, and that's kind of the way it's starting to shape up. We'll see. I mean, how we come through this, but we are still in the summer doldrums. It doesn't really pick up until September, but so the volume was pretty light. But definitely pullbacks, kind of right and left here in the market. Do have the stock of the day here, and it's GSF. It's Global Foundries, very interesting company. It is a company that makes semiconductors. It fabs semiconductors for other companies. This is becoming a very big strategic issue for the United States. Many of the chip companies, such as NVIDIA, AMD, and some of the other ones, they do not actually make their own chips. They use TSMC, which is Taiwan Semiconductor Manufacturing Corporation, to manufacture the chips. Unfortunately, with the conflict with Taiwan and China, TSM has had some issues delivering. They are they're building a facility in Arizona, but that's not for sure yet. But TSM manufactures about 40% of the world's high-tech chips. So the idea with GFS, Global Foundries, is that they will step into the breach and manufacture some of these chips. So interesting stock. It was a startup. But it's very, very well funded. It's not, and it probably will benefit from some of the the congressional money that is going to go to this. This is a strategic industry, and so this is an area where I think that we're likely to see some some action, and we know there's going to be investment here. Just a question of when. Even in this down market, I think this one looks pretty good. I do not hold a position in it currently, but it does have a relative strength of 90, which makes it in the top 10% of all stocks right now. It has reversed, and it is starting to make a move, and potentially you could start moving into this stock. Let's kind of take a look at some of the checklist. The checklist is 78%, which is not a great checklist. But it is a decent checklist. Again, the name of this stock is GFS for everyone that's looking on TikTok. Global Foundries, and this one is the stock of the day. Currently selling at $60.80, down a little bit in the after hours action. Let's take a look, move on over to see sort of how the profits have been stacking up. Definitely increasing sales here, up 23%. Last quarter, profits were up 1,000%, which is pretty amazing when you consider it. But this is essentially this. There is lots of sales for this company because of the shift from TSM over to this company. So this one may be a good bet. I don't own it currently. I've traded it in the past. But I'm not currently in the stock right now, but I do think it's very strategic and potentially very, very good stock here going forward. So just something that you might be interested in. To kind of give you an idea of all the stocks that I have, all the exposure that I have to the market currently, right now it is looking pretty grim in terms of today. Today was not the day. To yesterday, everything I had was up, and today everything I have is down. So that just shows you the general market. I still have a large position in Cheniere, that's LNG, and that's looking pretty decent. Petrobras, of course, that's the Brazilian national oil company, doing pretty well at 1366. Always bargain outlet, which is increasingly becoming a go-to store for a lot of people because of the recession. Celsius Holdings, this one is down quite a bit. I don't know, I may be starting to cut back on this one, but I am sort of waiting for it to move higher. This is, right now, Celsius did sign a deal with PepsiCo, so it is looking fairly good in terms of the distribution. And of course, this is the energy drink. Celsius symbol on this one, CELH. And then I do have a small position in Range Resources. This is a natural gas company. Symbol is RRC. And Range Resources, look-see there on TikTok, so you can take a look at it. Currently, we are right below the $34 buy point, so this one is actionable, and I do think it's likely to move higher. This is it is moving into the it is moving into the buy range. So we will see what happens here. Relative strength 98 on this, making it in the top 2% of all stocks. And then, of course, to round it out, I have position in On Semiconductor, and this is a company that does not require manufactures its own chips in its own fab, so it does not have the constraints that some of the other companies like in have. This one off a little bit after hours, but it's in the buy zone as well. So I'm just waiting for the relative strength to catch up. It's 96 relative strength, and this one I am holding for right now. So right now, the sort of the stock of the day is GFS. I think that definitely, is looking fairly good. Take a look at the small portfolio here. With the small portfolio, basically in the green for Petrobras and On Semiconductor, and I'm down a little bit in Ollie's Bargain Outlet and Celsius. Down a little bit more than I'd like to be in Celsius, about 5.37%. So not necessarily the greatest there. We may be trimming, but I do think it does appear that, unfortunately, it does appear that we are moving into a sort of a downtrend in the market once again. And before we get to the questions, I want to take a look at the SPDR. SPY, of course, is the ETF that covers the S&P 500, and this one definitely is moving lower, and it basically has bounced. It came up to the 200-day moving average, and then it pulled back, so that is significant. This is the SPDR, very broad market ETF. So this does appear that we are coming to a situation where we may start another downward trend. We were, this has been a bear rally, and it does look like we've ended up at the top of that. So we should be probably pulling back down below 400. I hope that's not the case, but definitely seems like it is here with the market. But again, fairly late volume, so you don't know necessarily how that's going to come out. All right, let's get into some of the questions. Thank you very much. Happy Friday to everybody. Let's look at KR, and that's Kroger, I guess. That's broad safety of the stock that you can get. Groceries are are something that everyone needs, and that's kind of been the theme of the market as of late. It's just been very very much in those kind of stocks. Just want to switch it over here for people on TikTok so you can see. We're in this little bit of this downward trend. We did have an uptick today, but we're down. We're definitely getting some support at the 50-day line. Slow growth in terms of the sales. was up 8% last quarter, which is not spectacular. Profits were up 22% though, so that's looking pretty decent. If we go back to the daily chart to see if there's any entries here, not really any entries. We have what they call the death cross on this one, so you don't really probably want to be buying this one as the 50-day line moved below the 200-day line. So even though the relative strength line is moving up, I think you might have to avoid this one just because it does not look like it's doing well. So I would avoid KR here. I think I'd just avoid it. I think it's better to be in cash rather than KR, so I probably would avoid that. Again, we do have the death cross, which is the which is when the 50-day line moves below the 200-day line, so that's definitely something you want to look at there. All right, PXD. Let's look at PXD. Okay. And Pioneer National Resources. This is also a good company, kind of like similar to Range Resources. This one is an upward trend, and it does look like it's come down and tested. So, there may be something here. I do like the fact that this relative strength line is moving up 92, but what I don't like, of course, is the 50-day line that's moving down to the 200-day line. So that's not really what I want to see. So I'd probably hold off on this one depending on how the market trades next week. I would kind of hold off on this one. Just don't think it's a good time to take a large position. Oh, my voice is muffled. Let's see if that's a problem. I'm having a little bit of a head cold, so let me just see it. Make sure that my mic is working here. Yeah, it seems to be working. Okay, okay. Yeah, I seem to be working there. Yeah, definitely. A little bit of a cold here, so that may be part of it as well. Is part of it as well. All right, let's take a look at some of the people from TikTok and see kind of what they're looking at right now. Okay, so going up to the top here, is TSM a good buy? No, because it's just under so much political pressure. I'd be really careful about TSM. I do like the company, but I don't think it is a good buy. It is down below the 200-day moving average. Let me kind of show you this here. Yeah, okay. It's below that 200-day moving average, so that's nearly not what you want to see. If we compare TSM with Global Founders GFS, let's do that really quick. Just kind of see which one is looking better or worse. So this is the compartment. This is the chart for TSM, and let's go with GFS. And this is going to give us as you can see that the GFS is significantly is a significantly better a better performer than let's pull it over here on this chart. There we go. Okay, so you can see it here. Last year, if you were to put dollar in both of them, you'd end up with about 80 cents in TSM, GFS 135. So definitely GFS is stronger, and as you can see, it's moving stronger as well. So my comment here is I don't think you want to be in TFS. If you're going to be in the chip foundries, I think the one you want is GFS because that's and not TSM. So I think that will give you a good look. Hopefully, let me see if I have a little bit more gain. Let me see if I can put the gain on the microphone here a little bit. Let's see if I can do that. It's just artificial. There we go. Okay, so what I'm going to do is I'm going to drive the mic volume a little bit higher here, so it'll be better. It was an automatic there, so it was adjusting that. So hopefully that won't be an issue now. You can hear me, hopefully. And thank you for that comment, because I can't sometimes tell myself what I'm getting in terms of the output. Last week, you told last week that Macys was a pump and dump because of the Pepsi deal. Yeah, I still kind of think that's true, but I am still in it. CELH. Um, and it's come back down to the 21-day line. But I mean, I still think that still think it can move higher here, and I'm not totally ready to give up on it totally yet. It did move very nicely yesterday, and of course, it gave back all of its gains today. So, not a good thing there at all. EQNR. Let's look at for Charles. EQNR. And let's see what comes up there. Yes, and this is the Norwegian company. Also in the petroleum space. Think about the petroleums; they tend to run all pretty much the same. I mean, in terms of they all depend on the price of oil, of course. This one's good. It's in an upward trend. It's in this consolidation, which is very nice. The question is it going to move higher? It definitely looks like it potentially is becoming actionable. It's up after hours. I definitely like that in this kind of look at. So the question is it viable? Let's look at the checklist on it. Very strong checklist, 89%. Making it good. So I think you could definitely move into a position here. I definitely think EQNR is viable. So I would say EQNR is viable. And I would go with a half position. And that's kind of where I would do it, because this definitely is viable. The relative strength line 97, and it's pointed up, so that's very good. Came through some very strong earnings, up 225% quarter-over-quarter. So that's definitely the kind of stock you want to look at, and it is setting up really well. Let me just let's for fun compare this with let's compare this stock with the ETF, with the oil and gas ETF, and that's the XLE. Okay, yeah, so this is outperforming the XLE. So definitely, yeah, this is definitely something that you could look at, and I definitely think you could move into this one. And I think you can definitely. I definitely think this is a viable position, one half position definitely, and I've charted it against the XLE. This is of course the energy spider here, and it covers the entire kind of the entire waterfront. But this is definitely outperforming it. Very similar in terms of pattern, but much better. So if you started with $1 back a year ago and you put it in the XLE, you'd have $1.75, and if you put it into EQNR, you'd have $1.95. So wow. Definitely something there. So the oil and gas has been the place to be for about the last year in the market. Just absolutely the case. I wish I was been in it that heavy. I was in it, but I'm not in it as heavy as I needed to be. That's for sure. All right, Macys. In terms of its competitors, news coming the 23rd. All right. Well, that's a good question, because. Yeah, I definitely think we can look at Macys, and I'm going to look at Macys, and I'm going to look at Kohl's. Okay, all right, so that's Macys. Oops. Yep. Macys, Kohl's, and Walmart. So what I'm doing here is I'm graphing the three. I'm graphing the. Excuse me. I'm graphing three retailers here, and this is KSS, which is Kohl's. That's a kind of a regional department store there. Walmart, and then Macys. So basically, Macys is outperforming Kohl's, basically the same as Walmart. Here's the thing: if you're looking for retail, I think the one you got to look at is Dollar Tree, DLTR, And I still think that may be doable. You can see how much better Dollar Tree has performed than either Macy's, Walmart, or Kohl's. You can see how that much better that is. So what I would recommend here, instead of going with Macy's, take a look at Dollar Tree, DLTR. I think it's still actionable. I want to take a look to make sure that's the case. Yeah, it's still in the buy zone. So I definitely think that you can still buy Dollar Tree. This is the one I think is going to do very, very well in this recession because people are just trading down, and that's just a fact. So I think that this will do very well. So Macy's really is not really doing that well. So I would steer clear of Macy's, and I'd possibly look at Dollar Tree because that's where it's gonna. I think that's what's gonna do the best. All right. Let's look at an entry point for the spider and SPY. And let's take a look. And really isn't a good entry point here. This is not a good place to enter spider. I would not buy it here because I think we have starting to see a downward trend. And I think we could definitely move lower on. We could definitely move lower here. Very, very easily. And we'll see if it holds the 10-day line on Monday, but I do think that we're going to see a downward trend in the spider, so I would not buy it here. I thought, we came in with this cup, but, the question is, could it get through this resistance? It couldn't. So on the weekly chart, I think it's just not looking very good. So I probably would not be a buyer of the spider. Right now, I think I'm probably going to be lightening up on Monday and getting more back into cash as usual. And there we go. All right. Let's see. GM, General Motors. Let's take a look here. And General Motors looks like it's bouncing. I'm not a big fan of General Motors either. I sold my position in Tesla as well. I just think that, it's, the car companies are going to, the biggest problem, I think, that not only do you have the shortages with the car companies, but the real problem is the financing because of the fact that so many other people, because of the rising interest rates, it's going to be very difficult for a lot of people to qualify. So I definitely don't see, I see sales, automobile sales actually going down in this next year. And as you can see, the earnings per share is down for General Motors as well. So I don't think I'd probably be a big buyer of that. All right, buy Pfizer for the pack you'll avoid for your cold. I try to really be careful about taking anything. For that because I think Pfizer is. I think they've put out some things that are not very good, but I do trade the stock. So, all right, Jim, the spider top is a review of 2000 on the charts. Yeah, I think you're probably right. Let's go back and let's take a look back in the Wayback Machine here, and look at that. Let's get the spider SPY. And there we go. Okay, and what I'm going to do here is I'm going to go and see if I can move it back here. Let's see how far back I can go. Yep. So I'm going to go back here to 2008. What I'm doing now. Well, yeah, it lets me up to 2008, so I can go back that far. Let's see if I can do this. 9/1/2008. Let's see if it'll let me do that. Okay, so here we go. This is the spider going back to 2008 here. And as you can see, we were in this downward trend, just like you're right, and then we had a bounce up to the the 50-day line, and let's just go for just a tad here. Let's see if we can go forward. So I'm going to put it on the put up to all right. So you're right. I mean, we're coming up here. We've moved past this now. So yeah, it's very similar. And unfortunately, if we look at back all the way back on the slider, you're very right. I mean, this is the pattern here, and the rally happened. And let's go out one. Let's go out a little bit to and kind of see what happened there. Yeah, and then we came all the way down. We rallied, and then we came back up. Right. Yeah, we came up. This is a 2009, and then we started the move down. So I definitely think we're gonna fall again. I think you're right, and so we got to just. Your mic is all messed up. I don't know why I'm having so much trouble with my microphone. Let me check it again here. Okay, well, I'm getting. Let's switch to an alternative mic here, so that might help a little bit. And see if it goes there. All right. Well, I'm sorry about the mic, and I'm gonna probably call it a day. And I'm gonna be I'll be back on tomorrow on Monday at 5 o'clock. Hopefully, I'll get this cold over with. This one sounds way better. All right, thank you. I was using the mic on the headset, but I'm now using the one on the camera. So hopefully that will do it. Sorry about the problem with the microphone here. I just seem to have, for some reason, the camera mic seems to be better. I don't know, but I can only do it when I don't have a lot of people here. All right. Well, I am kind of pooped out today. I tell you what. And so right now it's not a good time to initiate new positions. I'm trimming my positions. If you're not already a member of the Action Trade Alerts, please do so. It's very easy. Just go over here to www.Dallas Trading Floor. I'll be back on Monday, and hopefully I'll get this cold over with. I have a cold right now, so it's not the greatest. But please like the show. It really helps us very much. Appreciate that. And we'll get back to you on Monday. Happy trading, everybody. Stay safe, and please hit the like button. I need more likes. All right. Thanks so much, everybody. I will see you back here on Monday at 5. Happy trading.